Welcome back to the Retirement Planning Made Easy.com show. I'm your host, as always, Chris Hammond. And on this show, we talk about retirement related issues that help out people that are within 5, maybe 10 years of retirement, or maybe you've already retired, you're a few years into it, and you just want to make sure that you're doing everything all right. Well, we talk about all issues surrounding that. And today we're going to talk about, where do annuities fit in a retirement plan? There's a lot of questions surrounding annuities, and they can be some annuities can be very easy to understand products that fit a certain need. Others can be more complex, and it can be a little tougher to understand what they're doing. So we're going to try to simplify that by really focusing on the reasons that somebody would want to own an annuity. If you're listening on the podcast, I will walk through the slideshow. If you guys are watching it on YouTube, you'll see all of this in front of you. But let's talk about the reasons to own an annuity. So the first reason would be you're wanting to protect your money. And if you go on the side of annuities that are called fixed annuities, as opposed to variable annuities, then you're not taking market risk. So you're protecting your money if you're on the fixed side. But even on the variable side, there's usually some type of a benefit in place that if your value goes down, because it will fluctuate with the market, if your value in your account goes down, a lot of variable annuities will have something in place that says, but we'll at least keep your death benefit if you die to be the original amount that you put in. And so even if the market goes down. So, and there's a little bit of money protection in there as well. So one reason to own an annuity, protect your money. Let's say you have $1 million and you have a portion of it that you say, I understand I want to have exposure to the market. I want to get the growth that the market can give long term, because I have to not only think of myself today, but I have to think of myself 10, 15 years from now that's going to need that growth in their portfolio. And so you want to have some of that exposure, but you may have a portion of your portfolio that you say, but this other portion, I need it to be protected from the market. As long as I have something that's not going to go down when the market goes down, that's going to make me feel a lot more comfortable in my overall strength of my retirement plan. Protecting money is something that annuities can do, and that will be one of the reasons to own an annuity. It's very important that we go through these 4 reasons, because if you don't have one of these 4 reasons, then you probably don't need an annuity. So let's go on to reason number 2. So that's protect money. Pretty straightforward. The next one is provide income. Annuities are the products that are known for providing income. If somebody says, I have an annuity, oftentimes what they mean is they have a stream of income that's going to come into their checking account, perhaps even for the rest of their life. Social Security is a type of an annuity. It works like that. It's a guaranteed lifetime income, and it's probably one of the best annuities that you can get because it has inflation adjustments in it called cost of living adjustments. They go up whenever we have inflation. We had a big increase during these last rounds of inflation. They are in a type of annuity. Annuities provide income, and there's different ways that they do that. Probably the easiest one that is the easiest one to explain would be what they call an immediate annuity. You take a lump sum of money, you give it to an insurance company and say, take this money and give me an income stream for the rest of my life, even if I live to be 500 years old. All right. Pretty straightforward how to do that. And there's ways that those annuities can be structured so that if you died 3 months later, that what's left over still goes to your beneficiaries. So the insurance company doesn't keep that whole lump sum if something like a terrible accident happens to you very shortly thereafter. There's ways you can structure that to get the lifetime income, as well as to know that if you were to die very early in some type of accident or sickness, that the money that you put there would not be all gone, disappeared, and put into the insurance company's coffers. So that's probably the easiest way to use an annuity to get guaranteed lifetime income. Now, another way that annuities can be used to get that income for life is a thing called an income rider. These are typically attached to either a variable annuity or they are attached to a fixed indexed annuity. And they provide another way that you can turn on an income stream and actually guarantee it. In fact, a lot of the fixed index annuities, you can look and you can say, if you put the money in today and you wait 3 years, this is how much it's guaranteed to pay you. If you wait 5 years, 7 years, 10 years, whatever it is, they can pinpoint and tell you you're guaranteed to get this much income for the rest of your life. And if you're married, you can even choose an option for joint lives. So both of you know that as long as one of you is alive, if you're married and one of you is alive, that income stream is going to keep on coming in till you have both passed away. So that would be the second reason to potentially own an annuity. The third reason would be to provide some long-term care. Now, the way annuities do this is they'll often have a rider, which is just something that you attach on top of an annuity, like a fixed index annuity, and you attach this rider on it. Oftentimes the rider is for a guaranteed lifetime income, but if you qualify for long-term care, they'll actually take that guaranteed lifetime income that they contractually are guaranteed to pay you, and they'll double it so that you're getting some additional income forwarded out to you. And most of them, they'll keep that doubled until all the money you put in that annuity has been paid out. So you get all your money back, and then the income goes back down to the regular amount. So now you've not only got all your money back, but you're now still getting that regular stream of income on top of the money that you put into that. So they only double it if you need long-term care. So that's another way another way to get some long-term care, and another reason that you might want to buy an annuity. And then the last reason that you would want to own an annuity is because they provide some type of a death benefit. So there are some annuities where whatever money you put into it, of course, that account value is typically going to be the death benefit. So nothing really, exciting happening there. It's just your money. They're just going to pay it right back out to you, pretty straightforward. But there are some where you can, again, attach a rider onto them that will actually guarantee to increase the death benefit the longer that you hold the annuity. So you know that maybe you're in a position where health-wise, maybe you can't qualify for life insurance, because life insurance is really probably the best way to have a tax-free lump sum of money pay out to your beneficiaries. But you have to health-wise, you have to qualify for it. But if you can't, there's always another option where you can use an annuity that has an income rider attached to that guarantees that your death benefit is going to get bigger and bigger every year, even if your actual account value while you're living does not grow at that same pace. It'll have a benefit in there that will increase for the death benefit for your loved ones. So that would be the 4 reasons, and this is really a bird's eye view looking down at at the reasons you would want to own an annuity. When we get into the weeds on how that's going to work as far as providing death benefits or protecting money and all that, then there would be more details to discuss about this. So we're keeping this high level here, but those are the 4 reasons that you would want to look at owning an annuity. And if you don't have any of those 4 reasons, there's a good chance that you probably don't need to have an annuity. So let's talk about some of the takeaways with this. The first thing you want to do is understand what you want an annuity to do for you before buying one. This gets back to those 4 reasons. If you're wanting an annuity to be this high growth, high risk product that's going to grow your money fantastically over time, an annuity is not a type of product to do that. So you have to understand what you want your money to do. Do you want your money to be protected? If you want it to be protected, then maybe an annuity would work for you. Do you want lifetime guaranteed income? Maybe an annuity would work for you. Even if you wanted income for a certain period of time, say, I need income for the next 5 to 10 years or whatever it is, because maybe you're wanting to delay Social Security and you want to set something up to where it's going to pay out during a set time frame. Well, that would be it would be an income need. And annuities work for that as well. So first understand what you want an annuity to do before buying one. Next, then pick one that meets that goal. If you're looking primarily for protection of your money, then find one that's going to protect it, doesn't have any market risk wrapped up in it, of loss at least, and pick that one. If you want one that's going to give you the highest guaranteed income going forward, and you want to retire in 4 years, then find the annuity that gives you the highest contractual obligations of paying you out the most income after you wait 4 years. Or if you want the income to start immediately, find the one that's going to do that. So you want to pick the one that meets your goal, because all annuities are different, just like all cars are different. If you're wanting a really fast car, you might want a Lamborghini. If you're looking to spend a lot of money, right? If you want a car that's going to haul a lot of people, you might want a minivan. Not all cars, not all vehicles are made the same. And the same goes with annuities. Also remember, if it's too good to be true, it probably is. Annuities do those four things that we just went over. They protect your money. They can provide guaranteed income streams. They can provide a little bit of long-term care protection through their income riders with doubler benefits on them. And they can provide some death benefit protections if you're in a situation where you can't qualify for health insurance. If you were to see some offer that was saying it was going to provide a lot of upside market potential with no risk on the downside, that's probably too good to be true. It probably is. So there are annuities that will grow, and their interest is based on how the market performs. And there's nothing wrong with those products. And a lot of times they fit the need of protecting your money. Those products, though, they're not going to have as high of growth potential as just going straight into the equity markets. Okay. They serve a great purpose. Just understand what that purpose is. And if it's too good to be true, well, then it probably is. And then lastly, the big key takeaway is make sure that you get expert advice on how an annuity could be incorporated into your retirement portfolio. Do you have those four reasons? Maybe it needs to be in there. Does it financially make sense for you? Maybe it needs to be in there. Maybe it doesn't. And so getting good expert advice on how annuities fit in your portfolio for your own individual situation is very important before you hop into one of these contracts. And if you want some additional retirement planning help for yourself, head on over to my channel, retirementplanningmadeeasy.com. You can download our free copy of the essential step-by-step retirement guide. It's got some good information in there that can help you in your retirement planning journey. And until next time, I will see you guys on the next video. Thanks for watching. Thanks for listening.